talk a little bit more about the markets. Bob Iaccino is co-founder and chief market strategist at Path Trading Partners. Bob, nice to have you back with us. And we are coming to the end of April trading. We are up today for North American markets, but down on the month overall. What's been the mood in your opinion?
Well, it's a couple things. Obviously, we have an FOMC meeting coming up on Wednesday, and I think the market is perhaps not sufficiently hawkish enough for the kind of data that we've seen here in the U.S. The PCE, although it seemed muted on Friday, when you kind of look under the hood, was a little bit stronger than I think the Fed would be comfortable with. You look at the 6-month annualized running at a little over 3.4%, so almost double their target if you round up. And I think they're going to be concerned with that. Now you see a little bit of, I wouldn't call it weakness, I would call it the inability to hold a bid in the equity markets more than anything. I think sort of transmits that nervousness into the equity markets that maybe Jerome Powell is going to be a touch more hawkish than the Fed would like to see on Wednesday.
Okay,
well, I'm sorry, investors would like to see.
And you know, investors have to be aware of that, but also, you know, a lot of people are investing in individual companies, and we are very busy with earnings season, and you never know what you're going to get. Domino's Pizza, for example, here's a company that, you know, regardless of where interest rates go, they seem to be firing on many cylinders right now. What do you make of a business like that one? Shares up pretty substantially today, almost 5%.
Well, it's pizza. I mean, bad pizza is the best pizza you're going to have if there's no other pizza around. It's pizza. And I'm not saying Domino's is bad. Domino actually improved their pizza from when I was in college and was ordering 3 of them for $1. But now you're looking at a company where, for example, I don't even eat carbohydrates, and I still order pizza, and I scrape the toppings off and eat them like they're a soup. So when you look at the fact that they got this jump in revenues from discounting, that kind of gives you a little bit of a clue as to what may be going on underlying the economy or beneath the surface, where the discounting is still the positive sign for retailers. And, you know, they're sort of a food retailer, right? And they did really well with some specials and some discounting. You're going to start to see that bleed across the markets. Domino's has just always been really good at it because they're a very cost-efficient operation, and they've done it without layoffs and with technology. So that's a good sign overall for the stock.
All right. We got to start a pizza soup business there, Bob. I bet there's a market for that. Yeah. Well, I'll tell you, you can't buy 3 Teslas for $1. How's that? Now, there's obviously been a big push to see the company roll out more affordable vehicles. Elon Musk sort of sprinkled some thoughts on that last week when they reported their quarterly results. Shares ended up having a nice pop on that news and maybe a little bit more clarity on the AI plans. But then today he surprises the market, goes to China. Looks like he's trying to win over investors here. Shares are popping right now. What's your take?
Well, I think, first of all, him getting his autonomous driving, basically, I called it autonomous driving freedom in my note this morning, where he can just allow his autonomous driving vehicles to just drive freely in China. I think that was a big jump for the sort of growth of that area, which, as someone who can't wait for automated driving, for my car to drive me somewhere, I'm super excited for that personally. I don't think that's going to change the underlying weakness of Tesla and the tone of the stock since mid last year, simply because China is not going to start to favor Tesla over their own EVs. They're definitely taking the lead globally in EV development and affordable EV development. I think the turn for Tesla has to come with an actual affordable EV, not a $30,000 to $40,000 model, but something that the average U.S. consumer could go out and buy comfortably. And until he's focused on that, I think the stock's going to continue to struggle despite the move today.
Okay, and then since we are pretty busy with tech earnings this week, and we got Amazon and Apple on deck, you know, are there any takeaways from earnings season so far? I think one example worth discussing is Alphabet, which I think heading into earnings season, even though they've put all this money into the AI push, a lot of people thought their search business was being threatened by some of this AI stuff, and then they came out with quarterly results and some shareholder-friendly news, and the stock popped. It's pulling back a little bit today. But what were some of the takeaways for you on a company like Alphabet?
Well, I think last time I was on with you, Alphabet was one of the buys that I listed out for you guys, and I had a target of 170. It went above 172, so I was pretty happy with that trade for myself. But looking at it going forward, I am somebody who uses more AI than search right now. But I think if you haven't adjusted to the way that AI gives you your results, you're going to end up back at Google. And I think that's something that they're showing. At the end of the day, they're still a data and an advertising company, and they're still doing very well in that area. So while Google hit my target, it's not, a target to me, John, is not something that causes you to exit a trade. It's something where an action is needed, is demanded. And my target of 170 just had me move my stop up tighter, and I'm staying in the stock for now.